With better than expected economic numbers and earnings season coming up, the market is on a bit of a bull run. But how long can this continue? Let's talk about it. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our Elite webinar. My name is Chris. I'm part of Riz International, and we are looking to make our money work for us to achieve financial freedom. And if that's something that you are excited about and want to learn more about, make sure you get down there and click that like and subscribe button, click the bell icon next to it, and leave me a comment. Let me know what you're looking at this earnings season, because Monday is the day that kicks off earnings. So we're going to have a lot of catalysts going on this week that can push the market one direction or another. Now, I talked with Riz a little bit before the webinar just to kind of get an idea on everything that was going on and what he was going to talk about. And one of the things that we're really seeing right now is the inflation rate. We had the CPI numbers reported this week, or last week, I should say, and they were better than expected, and the market responded happily, and up and up we went. Now, of course, we did see a bit of a down day on Friday. We kind of maybe hit the top here, but we closed right above this 4,500 support and resistance area, which should be interesting to see if we can hold that on Monday, because if we can't, we could see a drawdown back into our channel here. Now, there's no guarantee, but now that we're above the channel, that channel may act as support, and if we come back down there, we may bounce off and push back higher, which is right around the 40-50 area, which we were having some issues pushing through before. If you'll remember, right here last week, we're having issues there, and the week before, or 2 weeks before rather, in this area here. So what's been going on? Why has the market been pumping so much? Well, I told you about the inflation rate. Inflation is now 3% annualized, which is, you know, kind of closer to what they want. They wanted around 2%, so they're getting closer, but still we are higher than expected. And then there are a lot of funds and institutions covering their shorts right now, which is helping push this market higher. Also, there's a lot of retail FOMO going on. So people are FOMO'ing in the market, jumping in, and what we're seeing is a melt up in the market. With all of these shorts covering and people jumping into retail stocks, that will help push the market higher, and that's exactly what we're seeing. So that is why we are seeing this heavy push right now, if you were wondering. I'm sure a lot of people are. What could happen this week? Well, I kind of already talked about it. Obviously, 4,500 going to be a critical level here on the S&P 500. And if we kind of pull back down towards this support area of this ascending channel, we'll have to see if that holds or if that's even relevant now that we have clearly breached the channel. So we're going to have to see that going into this week. We're going to be keeping an eye on it. And like I alluded to earlier, it is earnings season. It starts this week. So, you know, we've got, earnings being reported starting this week. So there are going to be a lot of big names coming in that we're going to be keeping an eye on. Let's take a look here at the S&P 500. I got the chart fixed just like I promised. What we are seeing is tech still continuing to run, but communications are right behind it. Tech up a whopping 42% on the year, closing in on 43, while communications is right there around 38. Now, remember, there is a lot of overlap between the tech and communications sector, so you will see those kind of go up and down together. Consumer discretionary making a really big push this week. Really pushing up hard, as we see the market kind of curl back upwards and we melt upwards, as Riz was talking about to me. And another thing we're seeing to really perk up is real estate. Real estate is really starting to come up, getting up above the zero line now very, strongly, almost at 5%, sitting right now at plus 4.64%. XLP, which is consumer staples, are sitting right about even on the year, basically 0%. And then financials just slightly below, but starting to curl back upwards. Healthcare, energy, and utilities taking a bit of a hit, still below the zero line, but also starting to move up for the most part. That being said, we did see a big rollover in energy here, while healthcare and utilities, did kind of push up a little bit. Taking a look at our asset classes, we see oil starting to make its run here, but we are still stuck for the most part between this 85 and 61 area. We are still pretty channelized. Now, we did kind of bounce off or jump up to this 76 area, but we didn't quite make a hard push over it. We did come back down with the market on Friday, so that's something that we're keeping an eye on. And gold made a bit of a spike, and you'll see why here in a minute. So what we're seeing here is we're seeing the dollar starting to weaken a little bit, and we did take a big dip here this week. And I talked with Riz, and we're still unclear as to why that is. So if you know what it is in the comments, please feel free to leave us a comment and let us know. But what we're seeing here is we're still seeing bond yields continue to go up, at least for the 2-year bond yields. Those are the hottest right now. Looking here, let's see, where did we close on Friday? Right around 4.77%. Yeah, that is exciting if you're in 2-year bonds. But what we are still seeing here is the 10-year and the 30-year bonds still having a hard time really breaking over this 4% push. So we kind of came up here, it looks like right around the end of last week, and we rejected fairly hard. But we are seeing the bonds kind of mirror each other as far as they're up and down, except for the 2 years here. As you see these bonds go up, we also see the corresponding bonds below it go down. So let's take a look at the critical dates this week that are occurring in the market, and pretty much a non-starter because of earnings. Earnings is going to be the big catalyst this week. Really no major economic catalyst going on. Building permits is pretty much a nothing burger. But retail sales will be more interesting, but still probably not going to push the market too much in either direction. Earnings will be more important as far as that's concerned. COP. All right, let's take a look at COP. All right, so COP, looks like we took a pretty hard bounce off the 200 simple moving average and a massive rejection coming in here, pushing us back down right around to 107. Let's take a look here and kind of see. Jeremiah, are you kind of looking more long or short on this? So we definitely got some support down here at about 105.50, at least technical support. Yeah, that 103 area looks pretty solid as well. We've bounced off of there multiple times. I would have a hard time shorting this. Long at first thought it was interesting on Thursday. It was, but I mean, we saw this huge technical rejection. So what I would do on this one, if oil continues to go, if we get to see a big push over 76 and ConocoPhillips kind of goes with it, then, I mean, we could see this curl back up, or we could kind of retrace back towards support. Both of these moving averages here, the 100 and the 50, are sitting right next to each other, so that'll be a fairly large area of technical support as well, which is right around this 103.34 area, which we bounced off of multiple times in the past. Now, this stock seems to be a bit more jumpy. We kind of see these long wicks and tails, so it is a little more flighty, all things concerned, but if we see a nice bounce off of some type of support, I would be looking at like 105.50 is the first area of support that I would be keeping an eye on. If we kind of retrace back down there and bounce off of that, that would be great. If we start to rally on Monday, that could be good too. And let's look, we got earnings coming up here on Thursday, August 3rd. Looks like before the market opens. Yes, I know, Athena. So with one child gone, the other one comes to get more attention. But yeah, earnings looking pretty good. Let's see. Looks like we missed the ex-dividend date by a few weeks. That's unfortunate, but such is life. Earnings have been overall fairly decent for ConocoPhillips. I like it, honestly. I would want to see it obviously start curling back upwards if possible. I don't know if I would try and knife catch this, especially if it wants to dip lower. If we see, continued lower movement in oil, that'll obviously affect this more. So that's something to keep an eye on. So with this one, I would be watching the price of oil as well as the chart on this before I decided to try and pick an entry. But yeah, really beautiful technical rejection here. I don't think I would short this. It feels a little risky to short it. I'm not saying that you can't. Obviously, you can definitely make money shorting this thing if you get in at the right time. But with oil being fairly stable right now, we kind of see this sideways movement in it, even though we started having a nice push this week. So yeah, I would want to see it start to kind of recover a bit, and that might be a position to go ahead and take an entry, but make sure you keep an eye on this 200 simple moving average because that has definitely hindered ConocoPhillips in the past. All right, Patrick wants us to take a look at 9, N-I-N-E. Okay, 9 Energy Service. Well, this is an interesting chart. So, wow, okay. Let's take a look at that, shall we? Wow. Yeah, so this is some what we'd call some penny stock bullshit. Personally, myself, I wouldn't touch this with a 10-foot pole, but I'm not here to give you financial advice. As far as the technical plays looking at, obviously we kind of rejected off the 100 here, and we've bounced off the 50 before. So, but I mean, I just wouldn't touch this thing, honestly, if I were you. Patrick, this thing looks like a piece of garbage. And yeah, my friend mentioned this to me, so I appreciate your honesty. Yeah, no problem. Yeah, this is penny stock bullshit, is what it is. We're below $10. Yeah, we had some pumping here. You see how well it pumped up to about 16, and then we rejected off that. I would advise your friend to be very, very careful with this, Patrick. Again, I'm not giving you financial advice or telling you what you should do, but I wouldn't put my money into this. But yeah, no, it's not a problem, Patrick. I'm glad to give you my opinion, but yeah, I wouldn't touch this with a 10-foot pole. I would stay away. Everybody's favorite, Tesla. Let's take a look at Tesla. All right, so Tesla had a nice push up here. It looks like we got earnings coming up the 19th. That is this week. So Wednesday after market closes. We are very overextended on Tesla here at this point. We've had a complete reversal here. The 100 and the 50 are now above the 200 simple moving average, which they were below it before. So we're seeing a really big push in Tesla here post earnings here back in April. So obviously we had some good numbers, missed revenues a smidge, but EPS was definitely in line. Tesla, of course, is a lot more news, related, news centric. Elon starts tweeting stuff and things happen. At least that's how it's been in the past, but I'm pretty sure it still happens that same way in the future. We're very close to overbought in this position here. I wouldn't be buying it here personally, especially with earnings coming up on Wednesday. If it were my money, I would want to wait and see what happened on earnings. You could go either direction at this point, but let's kind of back it up here. I know we've had multiple splits with Tesla. I just want to make sure. Okay, yeah, we're looking at the right thing. So now post-split, our all-time high for Tesla is sitting right around 415, 420 or so. So we got a long way to go to get there, but don't expect it to go in one earnings season. Let's put it that way. I honestly think that Tesla needs to kind of chill out a little bit. Now, we may just start consolidating sideways, honestly. After a big push up like this, we are kind of holding this area, which is good. That's definitely a bullish sign that we're able to hold these gains. We didn't gap up and then completely give it all back, which is good. So that's showing that it's holding, so we may be holding here. But that being said, if it lets go or earnings are less than ideal, then we could definitely dip back down here towards the moving averages or further, because that's just how Tesla does it. So I like Tesla in general as far as a company. I know Elon has his supporters and detractors. That's totally cool. But in general, I feel like they're more innovative than a lot of other companies are out there, and that's definitely good for them, as being reflected in their stock price. But buying it here feels a little bit like you've got a lot of downside, so your risk reward is a little bit off kilter if you take it long here. Now, it could just do something like this, and then you can come back and say, Chris, you're a freaking idiot. Well, maybe, but it also could have done something like this, and that's representing the gap down here. That is potentially what could happen post-earnings. So Tesla is very finicky sometimes. It's a big mover, so just be careful getting in here. If you're looking at it for a longer-term hold, I could definitely get behind you, but just be careful with it at this point. All right, Jeffrey wants to see a short on Unilever below 45. Or, sorry, excuse me, Unity Software. Well, I mean, technically we're in an uptrend right now, so I kind of have a hard time seeing your concept with a short there, so let's just kind of take a look at that. There we go. So, I mean, we're technically in an up channel here. So I'm not sure if I would want to be shorting this just, willy-nilly. So that kind of gives you an idea of where we're at as far as, technicals. That being said, we look back here and Unity's been absolutely destroyed before. I mean, that seems like a risky short, brother. That's all I'm going to say, Jeff. It feels a little tricky. If you're going to manage it, you're going to have to really babysit that short. That's all I'm going to say. If you're someone who can't sit around and watch the market like most of us, this short could be very, very tricky. So I would be very careful with this one. Now, You can take a starter position, and if we kind of get back down here towards the bottom part of this channel and we hold, then yeah, that might be a time to just get out and cut your losses, or take whatever little profit you've extracted out of it if it continues to move down. But, you know, for the most part, I don't think I would want to short this just yet unless there's a catalyst coming up. Also, we have earnings coming up on Wednesday, the 2nd of August. So we've got a little bit of time for that. So just be careful with it. I promise no more penny stock bullshit. Patrick, it's not a problem. Yeah, the bearish candle, and that is an engulfing bearish candle. That's very true, and you're not wrong in noticing that. So if we continue to go down on Monday, you could definitely take a starter position in this one for sure. And Patrick, it's no problem. You can always ask the question. The answer is just always going to be the same. And now we're going to take a look at everybody's favorite, and that is AMD, Advanced Micro Devices. It is running the CPU of this computer that I'm broadcasting from right now. So AMD looking really good here, honestly. I like AMD a little more than I liked like Tesla and stuff like that, because we're a little bit closer here now. Quite the whippy candle on Friday. Holy cow. Look at the whipsaw on that thing. The tail, or the wick on that is just insane. So I'll be interested to see how this goes on Monday. But AMD, of course, getting a lot of attention because of, everybody's favorite word, AI. And, they do make CPUs, and you need that for AI. So I get that. But I would say this one looks a lot better for a long here. If we see kind of a rollover in the market on Monday, and this kind of goes down with it, and we start coming back towards this 50 moving average and we hold there, that could be a very nice place for a long position. For short, I would want to see a very strong push below like this 111 area. That seems to be fairly strong at the moment. So I would feel more careful or more confident in a strong push below 111 or 110. I understand we're giving up a few dollars per share, but I think with that, we could see a push back to 102-ish, 102.50. Yeah, for sure, Patrick. That is quite a wick, and I think we saw a lot of wick on tech stocks on Monday, or Friday, excuse me, if I'm not mistaken. But yeah, if this thing pushes lower, it could be an interesting short. I honestly like it for a long. I think that AI and stuff like that is here to stay, and it's not going to be blockchain, in my opinion. We'll have to wait and see. But I think that AMD could definitely be setting up here for a more bullish position, especially if the market continues to push. But yeah, if you're looking for a short position, then I would wait till a strong push below 110 or 111. But for the most part, for me, I would look at this more as a long play. And yeah, that's my opinion for it. So awesome. Great tickers tonight, guys. Really appreciate everybody coming out, for all of our elite members here who are part of the live crowd. Thank you, everybody, for coming out. As always, when Riz isn't here, I do my best to make sure we keep this under half an hour because, as they like to say, time is money, and I value your time. So everybody have an absolutely wonderful weekend. Enjoy yourself. Enjoy the time off. The weather's beautiful, and we will see you in the market on Monday.